Hi, my name is Bruce Doueck with Keller Williams Realty, and today in today's topic for Treehouse Topics, we're going to talk about FHA financing. But before we get into our topic, I wanted to let you know that being a realtor, I'm here to assist people in their journey to purchase property. And part of that journey is helped along by a lender. So having a realtor and a lender as part of your team is critical to ensure that you are successful in achieving your property goals. And the realtor and lender and yourself kind of become the core team to help you achieve those goals. So today we're going to talk about FHA, which is one of the most common types of financing. And my guest today is Shea Peck with Bank of England Mortgage. And I'd like to give you a little bit of Shea's background. Shea has graduated from Duquesne University in 2010, is an athlete in college and currently today, and launched her career in the mortgage area a number of years ago, and became a loan officer and now is the head loan officer, mortgage banker for this Bank of England branch. Shea brings a lot of experience to the table, and she can tell us all about the ins and outs of FHA lending and what you really need to know in order to get going on your journey to purchase any property. This is really relevant because most property purchases today are made with a loan. 70% have loans involved. And then if you're a cash buyer, of course, this may not be relevant to you, but most people are not in that situation. So let's get into the topic. FHA. What is FHA? Tell us all about it. How do we move through this process in order to have a successful purchase with a little hassle?
So FHA loans. Let me get into my. Here we go. All right. So FHA loans. FHA first and foremost starts with, it stands for the Federal Housing Administration. So this product is very common. Like Bruce said, there are a lot of FHA loans out there that we do commonly just as much, almost as conventional. So here, a little bit about just the background and the general idea of how FHA loans work. It's a 3.5 minimum down payment. So when you're coming to the table, that is something that you have to either have out of pocket or something that can be gifted to you. There are no limitations on location. So it's not like it's just for specific areas, like USDA is for certain rural areas, but with FHA, there are not limits onto those locations. However, there are income cap or loan limit caps per county. So it just depends on what county and what state you're in. You can look those up online. But there are no income limits, which is also good, which makes it a much more viable product for a larger group of people, not having certain income caps on there. And then as far as credit score, for us at Bank of England, we are a 650 minimum to go in-house, but Florida Housing also has an option for FHA loans, and that also finances 100%. Which is something to keep in mind as an option when, say, you don't have the 3.5% down payment. I'll get into that in a little bit in a different slide. But with Florida Housing FHA, it actually goes down to 640. And then as it's an FHA, as the Federal Housing Administration, it is a government-backed loan. So you do often see that these rates price better than a conventional just because it's government-backed. So who's eligible for an FHA loan? Anyone purchasing a primary residence that does not currently already have an FHA loan. There are certain exceptions to that rule, but it's very far and few between. For the most part, if you are purchasing a primary, you cannot have another FHA loan, or you have to be selling that property to get a new one. You must be under the loan amount limit. So it's not like we're looking at actual purchase price. It is truly just based on the actual loan amount. So like I was saying, how that varies by county, the Nassau, Duval, St. John, this area of Northeast Florida, all of those counties have a limit of $373,750. So that's a lot of house that you can buy. And that's, you know, like I said, just the loan limit. Of course, you can, if you have some money to put down, you can always go higher than that purchase price wise. We just got to cap the loan amount around that price. And you may also purchase multi-unit properties. So this week I pre-approved one of my friends who's looking at, he's made an offer on a duplex and now he's making an offer on a triplex. As long as the borrower plans to live in one of the units as a primary residence, FHA does allow for multi-unit properties. So it's something that you can also consider as sort of like an investment and a primary residence. You can really do a lot with an FHA loan in that sense. Options for down payment, and can you have a cosigner? So down payment can come from any source, as far as checking, savings, your retirement 401. Sometimes you can withdraw from your 401k as long as your terms of withdrawal allow for that. Each specific 401k is different, so you do have to make sure that you're allowed to take that loan. There are a lot of times they're called hardship loans, or you know, you get them for your primary residence purchase. Anything in stocks, mutual money market accounts, and you can also receive a gift from an eligible donor. So you can't just get a gift from anyone. I've kind of laid out the eligible gift donors from family members. FHA actually allows for employer/labor unions to give you a gift, which is different. Conventional does not even allow for that. So it's kind of cool. FHA goes a little bit further in what they allow in their creativity as far as eligible gift donors. A close friend with a clearly defined and well-documented interest in the borrower. So I have someone right now who is not engaged, but her boyfriend of years and years, you know, we can prove they've been together for a very long time. He has documented interest in her. It's not just a random person. It's somebody that has true interest in her. Charitable organization or governmental agency or public entity that has programs providing home ownership assistance, or sometimes it's the first-time home buyer assistance program, which I said we were going to get to. So you do have a lot of options as far as eligible gift donors, you know, and when you're looking to have somebody help you maybe with that down payment. And FHA does allow for non-occupying co-borrowers, but there are some certain circumstances with that. So the non-occupying co-borrower must take title, and they cannot have any kind of financial interest in the property. So if, you know, if the realtor is like the mom or dad of the buyer, they cannot be a co-borrower on the loan. So it can't be someone that has like an interest in the actual property itself, but it will allow for a non-occupying co-borrower as long as they don't have a financial interest in the property. Something that we hear a lot of questions on with FHA is there are multiple sources, I guess, of with the mortgage insurance. So there are two different types on an FHA loan. There's an upfront mortgage insurance premium that is paid, whether you can roll that into your loan amount. Typically, that's what people do. You can also bring it out of pocket to the closing, but it is 1.75 of the loan amount that's collected up front on FHA loans. So whether that be in your loan amount or out of pocket, that is going to be something you've got to consider as a cost, whether it's rolled in or coming out of pocket. And if this serves just as the purpose of like regular private mortgage insurance on a conventional loan, it's just ensuring that if the borrower defaults, the lender is protected. So on FHA loans, sometimes with, you know, they can go to lower credit scores and a little bit more of a risky borrower. That being said, they sort of double down on the insurance behind that borrower in the event that they would default for the bank. So instead of PMI in a conventional loan, FHA has MIP, which is your mortgage insurance premium. And this is an ongoing monthly insurance premium that you pay for the life of the loan. So it's a secondary insurance premium, just like the upfront mortgage insurance. However, this is paid monthly. So you pay in the loan amount or, like I said, out of pocket. And then you do still pay a monthly insurance for that as well. So that's something to keep in mind when looking at this. You want to make sure that it fits into your mold, and, you know, we would go over you understanding that this is something that was going to be a cost in the loan amount as well as coming out of pocket monthly. Now, I will say for lower credit scores, sometimes pricing a conventional loan with private mortgage insurance is actually more expensive than the mortgage insurance premium on an FHA. So you can actually save some monthly sometimes if we look at going FHA instead, just depending on the risk assessment, I guess, of the borrower. So into the Florida Housing Bond loan option, this is the program that will allow down to 640, but there's an overlay for that. So from 640 to 660, Florida Housing requires that you must have 1 month reserves and that the borrowers have been on the same job with that employer for a minimum of 6 months. So it's not like, even if you have a history of being in the same work type and you change jobs, you still, if you're within that 640 to 660 range, Florida Housing FHA is going to require that you do have that new job for 6 full months before they will consider that as eligible income. And so with Florida Housing, altogether, they do not allow for non-occupying co-borrowers. So if this is a situation where you did have a co-borrower coming to the loan, it would not be an option to go Florida Housing, just because Florida Housing in general does not allow for a non-occupying co-borrower. That being said, there are a lot of perks to the Florida Housing with the down payment assistance programs that they offer. So there's $7,500 down payment assistance, which is 0% non-amortizing, meaning Florida Housing is going to give you $7,500 to help with your down payment. And then when you go to refinance or sell the property down the road, then you give that $7,500 back in the equity of your home. So it's sort of like Florida giving you 0% interest on $7,500 and you don't make a monthly payment, and then you give it back to them when you either refinance or sell. The $10,000 is also an option, but it is at 15-year, 3% amortized loan product. So you will have a monthly payment with that. And that's something to keep in mind. You know, sometimes with FHA, we have to be careful with our debt to income ratios, especially with the Florida Housing overlays. So we just want to make sure that you're in the right product. But these are both options as far as down payment assistance if you don't have someone to gift you money, or if you maybe don't have that 3.5% in the bank or in the market somewhere that you could pull it from. So that's just something to keep in mind as another option in addition to a gift donor. And that, in a nutshell, is FHA in total.
That is very cool. I didn't realize there were so many, variations that people can go down. Particularly interesting to me was, being able to buy a duplex or a triplex or a quad. I mean, that's be a great opportunity for a young person or anyone really to, build wealth and so forth as they get into home ownership and create another income stream for themselves and maybe even a retirement income if they're elderly.
Absolutely.
So great information.
Something I didn't think to mention, the income cap that I put on there was for a 1 unit. So when you go to a 2 unit or a 3 unit, the loan amount cap actually increases. So that's something that's a perk. Obviously, triplex, duplex cost a little more. So FHA took that into consideration and they raised their loan amount limits for those properties. So that's cool to have that.
Excellent. And with the overlays in terms of the Florida Housing, that's great too, because then you can get from 3.5% down to really maybe even eliminating most or all of your down payment. And so gives a lot of people opportunities for home ownership. That's really good to know. And then,
Absolutely.
Down into the mid 600s for credit score, that makes a lot of people eligible. So that's really a great thing, because a lot of people think you have to have a super high credit score in order to get into a house, and that's obviously not the case. So great information. One of the things I want to point out to folks is that Shea and I are committed to helping you achieve your goals. We care about the results, you and your results. Both of us are into continuous learning and competency to try and provide you the most relevant information. And we want to just present you with the facts so that you can make informed decisions. And that's something that's really important to us. So just to remind people, the best thing you could do with this information is really to take action on it And there's no time like the present to, get started and get pre-qualified. So you can get pre-qualified with Shea. There's a link here that you can look at to get pre-qualified. You can start to set your preliminary goals for your new home, figure out what your budget is, what your size, location, amenities, and then start searching. So Shea and I are here. We're part of your team to help you move forward with your property goals. We thank you very much for watching our video. We'd love to hear your feedback on what you liked, what you didn't like, what you'd like to hear more of or less of, and love an opportunity to work with you. So thank you very much for watching us today, and stay tuned for further recordings at a later date. Thank you.